Good morning, everyone, and welcome to the European crossover webinar. And we just got the German IFO. As you can see, it's 92.1. Reuters published for 90. Haven't come out with current conditions nor expectations yet. Just got the 91.3 for current conditions. Still waiting for expectations. No print there yet. 92.8. Taking a look at the data that we did have. Let's see here. We did have German producer prices came in a little bit stronger than expected at 0.2 month over month. UK retail sales came in negative 3.8, but not as bad as they were expecting. They were expecting negative 4.2%. Of course, as I said, we just got German IFO. Came in a little bit stronger at 92.1. Expectations 91.3, stronger than the Reuters poll. And expectations 92.8. At the top of the hour, we'll have Italian producer prices and CBI trends in a couple hours out of UK. Mexican private spending. And as we roll into the States, nothing. Current account, it's not a mover. But we do get Canadian new housing price index and Canadian retail sales at 8:30 Eastern. So really no data here. But today is the rebalancing with the S&P and the inclusion of Tesla, which is at 650. Well, closed at closing price was 656. Daily closing price. Let's move this out of the way. You can see here with Tesla to the moon. Holy smokes. This is really interesting because when you look at it on a weekly basis, remember we talked about this, and this is really key because we had this big move, and then 609 was 161%. It was also a hanging man. And then last week we went above, but we closed just a hair above what we were at. And what was going to happen this week? I guess with the inclusion of the S&P, they just kept the bid going and new highs again. And some other interesting characters too, because look how Netflix has really jumped up, really kept things going here. It's not new all-time highs though, but it's sort of come up and jumped above that 521. And also Peloton. Look at this moving Peloton. And then, of course, look at PayPal. But we talked about this. A lot of these equities that are related to the pandemic, Netflix, PayPal, Peloton are still doing very well. And you can see here the euro still way up in here. Dollar index still on the weak side, but on euro, we've been looking for as of late, we're looking for, never thought it was going to jump this high, which is this weekly level of 2284. And you can see that coming across here. So it's still looking for 2284. High today has been 2269. Here's the thing on this, and is that anybody who sold this market, I mean, anybody who short the euro from even, from Monday, Tuesday, Wednesday, essentially yesterday, Thursday, they're all underwater. So that's going to keep this bid. So, you know, and of course, the way the indexes are at, it's just going to keep this bid. So we'll see. I mean, more than likely, we're going to notch this 2284. We may even go beyond it, but that's where we're at. Cable. $35.94. We did tag it and get above it. It's on the weekly chart. And quickly the Aussie dollar. And I think we actually did get besides 76.39 on here. Then we'll take a look at the indices. And look at this NASDAQ. It just continues to go higher, as would be the S&P. 3716 here in the S&P. Looking at the NASDAQ on the 2-hour chart, you can see the most recent high at reactionary high, I should say, 12,675 down to the recent reactionary low, 12,218, 127% extension, which takes to 12,800. But it just gets this feel that it just wants to blow out and really jump. How high that's going to be, we'll have to see. But that's the feeling that this thing just wants to blow some people out. Let's take a look at the stories. Aussie New Zealand dollars set to extend winning streak to 7th week. Australian New Zealand dollars were heading for the 7th straight week with gains on Friday, giving added impetus by surging commodity prices globally and higher bond yields at home. The Aussie stood at 76.16, having climbed 1.1% to as high as 76.39. That's at 78%. That was the highest since June 2018 when it topped at 76.77, the next major chart target. The Kiwi retested 71.38. A breach of the resistance of 71.50 opened the door for 73.95. Both currencies have been buoyed by the outperformance of their domestic economies, where the coronavirus has been mostly contained, and the broad strength of global commodity prices. Iron ore, in particular, has been on stellar run, and robust Chinese demand and concerns about supply and ore is Australia's single largest export earner. When we look at through the lens of the commodity prices and Australia's terms of trade, it's not difficult to conclude that significantly higher yields are readily justified, said analysts at NAB in a note. At the same time, Australian bond yields had risen faster. Look, new highs in looking at this in the S&Ps and in the NASDAQ. Look at that. When we look at it through the lens of commodity prices and Australia's terms of trade, it's not difficult to conclude that significantly higher yield levels are readily justified. At the same time, Australian bond yields had risen faster than those in the United States, such that the spread between the 5-year yields had swung to zero now from as much as negative 18 basis points in November. The 5-year yield was last at 38 basis points, having touched a 3-month high of 42 overnight. As a result, the NAB saw the Aussie reaching 80 cents by mid-2021 instead of early 2022. New Zealand yields have also been on the rise as the economy recovers swiftly from the COVID lockdown, with GDP rebounding 14% in the third quarter. Survey out of Friday showed business sentiment jumped to multi-year highs in December, turning to positive for the first time since August of 2017. The economy has shown impressive resilience, said Sharon Zollner. Let's see. And investors take some money off the table after a week of dollar selling. The dollar also took a breather on Friday after enduring a week-long beating that has pushed it to below major support levels as its slide sucked in more short sellers keen to make an easy buck. Traders in Asia skimmed some profits from the big moves, which had even sent the greenback to a 9-month low against the safe haven yen, while the Japanese currency was falling against the likes of the rallying euro. The dollar was 3/10 stronger at 103.39 yen. Still, it's down 6/10 against the yen for the week and had fallen below September's 318 yen. On Thursday, it's set for a seventh consecutive weekly drop. Sterling's on course for a 2.4% weekly gain. The biggest picture here is the market's getting hopeful for the resolution of Brexit and the fiscal stimulus talks. Even U.S. economic data, rather than driving a safety bid for dollars, is increasing investors' expectations for a government spending package, Sim said. Against a basket full of currencies, $89.98, and deal talk. Heading to the weekend, traders are keenly focused on the progress of the U.S. fiscal stimulus talks and Brexit trade negotiations set to the tone of last week's of the year. A new potential roadblock is a $900 billion U.S. relief bill emerged from Congress on Thursday as some Senate Republicans insisted on ensuring that expiring Federal Reserve lending programs cannot be revived. Britain and European Union also struck a downbeat tone about the likelihood of the agreement on Thursday. For now, the narrative of global growth and the broadening of the recovery favors the risk sentiment sensitive currencies like the Aussie and the Kiwi. Elsewhere, the Bank of Japan extended its aid scheme for the corporate lending and kept other policy settings steady as expected, and is also pledged to begin an examination of more effective ways to achieve its 2% inflation target. And with that, we can go move into the analysis. Boy, that's a pretty good move here. Holy smokes. There we go. Take a look at the euro. So the euro closed on the high of the day, weekly level 1882, looms ahead for Friday and will be resistance. Oh, I said 20. I just say 28, 80, 2284. I don't know why I did that. Support will be 2161. And 2284. Onto the cable. Cable closed at another new high. Weekly level of 35.94 remains as resistance. Support will be 34.61. We can keep that 34.62. One pip is going to make any difference. As you can see, we came up to that weekly level of 35.94. You can see right there, coming all the way across. Onto the Aussie dollar. The Aussie closed at another new high, but capped at 76.39 to 38%, from 55 cents to 107.95, which will be resistance for Friday. Support will be 75.35. No changes. To the Kiwi. The Kiwi posted a brand new high on Thursday. Weekly level is going to be 71.50 with a lower wick at 71.72, which will be resistance on Friday. Support will be 71.15. And that lower wick is 71.72. And to the dollar CAD. I mean, some of these numbers is just like, it's almost like you're going by, you're going down the highway and you're going at, 75, 80 miles an hour and just going by mile markers. That's how crazy everything is, whether it's the indices, whether it's Bitcoin, whether it's the dollar, the euro, the Aussie, the cable, the Kiwi. I mean, it just doesn't say, you're just ticking off mile markers. That's all it is. Nothing more. And right now we're just looking on the weekly chart. So the dollar CAD posted a mini hammer on Thursday, suggesting the pair may be sold out. Support on Friday will remain 27 cents, with resistance at 27.97. Keep it there. Now we're going to go to the dollar peso. Same thing. We're just looking at weekly charts at this point. Now it's close of the week anyway, so might as well just keep them on the weekly charts. I mean, close of the week, that is. The dollar peso support will now. I don't know why that said that. Now shift to 1976. We did go on a break lower. So for now, it's going to be 1976, and resistance will be 1989. 1989 is that key weekly level. Well, they're bumping up against it, but once again, here's what we look like on the weekly chart. Moving on to the dollar yen. Same thing, weekly chart. The dollar yen broke to new lows on Thursday, reaching our target potential of 286. Because remember, there's the 286 right there. Well, I think that the actual low might have been 288, so Mox next 2 pips, and it did get there. And you can see now they're coming off of that. Support will be 286 with resistance at 355. We're just about there. So on to the cash doll index. So the dollar index closed on another new low. Bias chart support is 89.72, that which held. That will remain support. Resistance will be 90.16. There's so many things, as I said, going this way. Not only where the dollar's at, the euro, the Kiwi, the Aussie, the cable. You take a look at where the indices are. You take a look at the stocks like Tesla, Peloton, PayPal. I mean, it's just like doesn't even make any sense to even stand in the way. You're just, like I said, looking at these big markers. Essentially, we'll go to the cross rates. And that one, we'll take a look here on the daily. And there's just simply no change here on here. 73.77. Right now we're at 73.67 right now. And you can see we're just tight range here. So no changes here. 73.08 in the downside. Onto the euro pound. And who knows where this is going to go in light of Brexit and all that. Look at this. It's just all over the place. Look at these ranges too. This is just like nuts. It does look like almost like a head and shoulder. You're going to see right there coming across. That'll be 90.88. And right there coming across here, 90.09. And to the euro odd, 60.65 still remains here. They did take a dip earlier yesterday and came right back above it. And they're going to try and press the upside. For right now, immediate resistance will be right there at 61.56. It's already come back a ways. This is the real trigger right there. You see right here, here, and then this low. So we'll give it right there at 61.77. On to the Euro Kiwi. Same thing, you got a little bit of a hammer after posting this. So really the door should be open to push higher. And we're just going to go right across this body and these two wicks. And that would be 72.44. And I don't see any reason why they shouldn't break below the 71.50, but we'll put it right there, here below, which is 71.44 for support. On to the LCN. And we just stuck up here at these levels here. We had 78.75. I'm going to go and stay with that and keep that 78.75 as resistance and support 78.09. And we've got basically a wick, a tweezer, but still it's in the tight range though. That'll stay the same. And then moving on to the guppy. We had 40.29. That's going to remain the same to 40.29 and no changes here. 39.56 on the downside. Still trapped in this tight range here. And on finally with the sturdy nod. The 79.02 is holding right now. Thought we might press further. And on the downside, 77.49. Bit of a wide range, but when you're looking at both the sturdies and also the odd, you can see here, boy, it's been quite the rebound here also. So that's going to take care of it as far as FX. Amur said to take a look at platinum and silver. Well, we said in order to bust even higher, we'd have to get above this 1,071. It's holding up right here. You can see here, although you might have expected to be a little bit higher in light of where everything's at. So we're susceptible to a slide, I should say. But I wouldn't jump ahead of this at any time soon. But you can see here, good move here. We post this kind of medium-legged doji, but they close higher, so the door's still open for us to still make one more push. But this is the real resistance here. If it tries to push higher, it's going to be that 1,070. And silver, I don't really follow silver. Hold on. There's resistance right there. Which is 2677. We just got above this level, that 2565. And you got these wicks all down here. It closed above it. Solid close too, 3 straight solid days. Wow, from 24 cents all the way to 2602. And just above the 50%, even close above the 50%. It's actually holding. The low for today was right at the 50%. We're a bit weaker, but look at this strong move. The concern is that as we with this whole rebalancing and everything, you might see people trying to take some of the profit today. Although I don't think we're going to get any real any moves of reversals or anything like that until next week. But certainly, it's had a pretty good little move, and it is close above the 50%. Didier said if you can look at Bitcoin, same thing. I don't even follow Bitcoin. Let's see here. I had it on the charts before at one time. Yeah, see here. We'll take a look at a weekly. and it's above the Bitcoin futures. It's above where it opened back there 2018 in December. It's immediately sold off. Let's see if there's a difference between that. That's the Bitcoin futures. Oh, let me switch just a bit. Boy, what a move. Holy smokes. The key would be to stay above this open from 2 years ago, which was 2064, and we've made it to 23,915. Let's take a look at a fib extension. You can see they made it to the 161%. We saw a little bit of a reaction, and now we've kicked it up even higher. So at this point, you'd have to go with this, the 261%. Two 61% would take it up to 29,628. But it's already been a hell of a move. Trying to see if there's anything that's standing out on this. Let's take a look on the 2-hour chart. Well, very short term, you don't want it to lose 22, basically 22,892 on a short term basis on this 2-hour chart. And resistance would be, immediate resistance is 23,517. So we're kind of holding up in here, but then it really is potential for a slide. I mean, it's still bullish. This is the first area of support. True area of support is 21,869. But it's still holding up. You can see here, we took the dip, we held up a hammer, but each one's just a little bit higher, but you can see how tight the range is getting. Once again, like I said, when you look at everything, I just don't know if we're going to just go in and explode. But if you look at the NASDAQ futures on the 30-minute, look at the NASDAQ futures. This is the 30-minute. So your first decent gravestone doji. The wick's just a hair bit long. I mean, because you look at this, it's not a shooting star because the wick has to be much longer. But you can see here, right here in the 2-hour chart, and let's take a look at the spoos on a 30-minute. Same thing. You see that? Gravestone Doji. But we're still, and actually, look at this. We dipped into a sell mode and we flipped back into the buy mode. And then taking a look at equities. You can see where Apple's up. We talked about that 129, 130.42 to the 78%. This is all across on the daily. If you take a look at where Apple's at right now, let's see. 129.03. Microsoft, kind of a bit in no man's land. Still there, same place. Amazon holding above this 32.20. Let's see where we are in pre-market. 32.36, so still a little bit higher. Google has been really the big runner, but has really kind of like stalled up in here. And Nvidia, same thing. It was also a big mover for a while. Look at that. And it's kind of stalled here. Facebook, we broke below this area. We got busted above and kind of slid back. Came back with a hammer. That was earlier in the week. And right now, we're still below that 275. And Tesla's at 650. So that's what we have, and we'll see how we close out today. It's going to be probably a lot of volatility, but I don't think could be wrong. I don't think if we're going to see a move on a real correction, that won't happen until next week. Although we're going to see a lot of volatility on the open, but we'll see how it goes. I'm talking about the cash equity open. But thanks for joining us here on the European crossover webinar, and I'll post the buys chart.